Hello, and welcome to Boni's Life, your daily source for in-depth crypto analysis. I'm your host, Boni, and today is January 13th, 2026. We're diving deep into the price action of Bitcoin and Ethereum, dissecting the ETF flows, and identifying the key levels you need to be watching. Whether you're a seasoned trader or just starting your crypto journey, this episode is packed with insights to help you navigate these volatile markets. We'll be looking at the total market capitalization, the fear and greed index, open interest, liquidations, and much more. We'll also explore the global events that are shaping the crypto landscape and what they mean for your trades. And as always, we'll wrap up with actionable strategies for different trading styles. So grab your coffee, get comfortable, and let's get into it. First, let's get a snapshot of the overall market. As of today, the total cryptocurrency market capitalization is sitting at a healthy $3.229 trillion, up 1.6% in the last 24 hours. This indicates a slight recovery and renewed confidence among investors. The 24-hour trading volume is a robust $119 billion, showing significant market activity. Now, when we look at the derivatives market, the picture gets even more interesting. According to CoinGlass, the total derivatives volume over the past 24 hours has surged to $222 billion, up an impressive 18.04%. This tells us that traders are actively positioning themselves, and there's a lot of speculation in the market right now. Bitcoin's dominance is currently at 57.1%, while Ethereum holds 11.8% of the market share. This tells us that while Bitcoin remains the king, Ethereum is a significant player, and the altcoin market is also buzzing with activity. The fear and greed index, a key indicator of market sentiment, is currently at 25, which is in the fear zone. This is interesting because it suggests that despite the recent price increases, there's still a lot of uncertainty and caution in the market. This could be a sign of a potential buying opportunity for long-term investors. As the saying goes, be greedy when others are fearful. The average RSI across the market is sitting at 51.07, which is neutral territory, and the altcoin season index is at 43, also neutral. So, we're in a wait-and-see mode across the board. Now, let's zoom in on Bitcoin. The granddaddy of crypto is currently trading at $92,223.73, showing a modest gain of 1.6% over the past 24 hours. However, looking at the weekly chart, we see a slight dip of 1.7%, indicating some consolidation after the recent rally. The market cap stands at a massive $1.842 trillion, with a 24-hour trading volume of nearly $47 billion on spot markets alone. Let's dive into the derivatives data, because this is where things get really interesting. Bitcoin's open interest is currently at $60.65 billion, down 0.94% over the past 24 hours. This slight decrease in open interest combined with the price increase suggests that some short positions have been liquidated. Speaking of liquidations, we've seen $52.86 million in Bitcoin liquidations over the past 24 hours, with the majority being short positions. The funding rate is at 0.0099%, which is positive but relatively low, indicating a slight bullish bias but nothing extreme. From a technical standpoint, Bitcoin is at a fascinating juncture. The Bollinger Bands on the daily chart have squeezed to their narrowest since July 2025, a strong signal that a significant price move, a volatility breakout, is imminent. Martin Kazmierczak, the co-founder of Redstone, noted that the bands have narrowed to under $3,500, which is the lowest we've seen in 6 months. The big question is, in which direction will this breakout occur? The Relative Strength Index, or RSI, is hovering around 51.90, which is neutral territory. This suggests that the market is currently in a state of equilibrium, waiting for a catalyst to push the price in one direction or the other. Jake Kennis, a research analyst at Nansen, observed that Bitcoin continues to consolidate within a rising structure and has successfully avoided a bear flag breakdown, which he describes as a constructive but not explicitly bullish signal. We have some key levels to watch. On the upside, immediate resistance is at the 92,100 to 92,200 level, which corresponds to the 20-day exponential moving average. A decisive break above this level could open the door to the major resistance zone of $94,000 to $95,000. Vincent Liu, the CIO of Kronos Research, emphasized that a high-volume daily close above resistance would confirm a bullish continuation. A sustained move above this range would be a strong bullish signal, potentially triggering a new leg up towards the psychological $100,000 level. On the downside, we have a solid support zone between $90,000 and $91,000. If the price breaks below this, the next level of support is at $88,000 to $89,000, which has been a key demand zone. Liu also noted that this $88,000 to $90,000 range is acting as a key demand zone. A fall below this could see us testing the critical support level of $85,000 to $86,000, which would be a more concerning development for bulls. Now let's turn our attention to Ethereum. The world's leading smart contract platform is currently trading at $3,144.68, up 1.0% in the last 24 hours. Similar to Bitcoin, it has seen a slight pullback of 2.8% over the past week. The market cap stands at approximately $380 billion, with a 24-hour trading volume of nearly $24.5 billion on spot markets. Looking at the derivatives data for Ethereum, we see an open interest of $39.29 billion, down 1.65% over the past 24 hours. The funding rate is at 0.0070%, which is positive but even lower than Bitcoin's, suggesting less speculative fervor. We've seen $36.53 million in Ethereum liquidations over the past 24 hours, which is significant but not alarming. Ethereum's chart tells a story of consolidation and anticipation. It's currently trading within what we call an apex compression zone, where the support and resistance lines are converging. This typically happens before a major price move. The price is also hovering around the point of control, which is the level with the highest trading volume, indicating a temporary balance between buyers and sellers. One of the key things I'm watching is that ETH has managed to stay above the 34-day exponential moving average, a level that has previously acted as strong resistance. This is a bullish sign, but the declining trading volume is a cause for caution. Without a significant increase in volume, a sustained breakout will be difficult. As the analysis from Brave New Coin points out, muted volume historically delays follow-through in Ethereum trends unless broader liquidity conditions improve. Let's talk about the key levels for Ethereum. Immediate resistance is at $3,300. A convincing break above this level, with strong volume, would be a very bullish signal and could send the price towards our key upside target of $3,500 to $3,600. On the other hand, we have a strong support zone between $3,050 and $3,100. If the price breaks below this, the next important level to watch is $2,900, which is the 0.618 Fibonacci retracement level of the recent rally. This is a critical level, and a break below it could signal a deeper correction. Fundamentally, the narrative around a potential spot Ethereum ETF is a major catalyst. We've seen Morgan Stanley file for both Bitcoin and Solana ETFs, which is a huge vote of confidence in the digital asset space. An Ethereum ETF is seen as the next logical step, and the anticipation is building. We've also seen an existing Ethereum ETF begin to distribute staking rewards, which is a positive development for the ecosystem. Tom Lee from Fundstrat has even predicted that Ethereum could soar by 177% in early 2026, which would take the price well above $8,000. And now let's zoom out and look at the bigger picture. The crypto market doesn't exist in a vacuum, and there are some major global events that could have a significant impact on prices in the coming days and weeks. The biggest story right now is the U.S. crypto market structure bill. U.S. senators have just introduced a draft of this long-awaited legislation, which aims to create a clear regulatory framework for cryptocurrencies. This is a huge deal. For years, the industry has been operating in a gray area. And this bill could finally provide the clarity that institutional investors have been waiting for. The bill aims to define whether a crypto token is a security or a commodity, and it would give the Commodity Futures Trading Commission, or CFTC, more authority to oversee the spot crypto markets. This is generally seen as a positive for the industry, as the CFTC is considered to be a more favorable regulator than the SEC. However, the banking industry is pushing back hard. The American Bankers Association and other financial trade groups warned in a letter to Congress that trillions of dollars could be displaced from community financial institutions, weakening the financial fabric of towns and neighborhoods nationwide. The markup of the bill has been delayed until the last week of January, so this is a story we'll be following very closely. A successful bill could be a major catalyst for the next bull run. We also have some key events happening on January 15th, with the U.S. Senate Banking Committee holding a hearing on crypto regulation. This will give us more insight into the thinking of lawmakers and could provide some clues about the future direction of regulation. Beyond the US, we're seeing a lot of institutional interest in the crypto space. Morgan Stanley has filed for Bitcoin and Solana ETFs, which is a massive vote of confidence from one of the world's largest financial institutions. BitGo is eyeing a valuation of up to $1.96 billion in a US IPO, and stablecoin firm Rain has been valued at $1.95 billion in its latest fundraise. We're also seeing a surge in crypto M&A activity, with transactions expected to surpass a record $37 billion in 2026. This tells us that the smart money is flowing into the crypto space. And they're not just buying coins, they're buying the companies that are building the future of finance. Let's also talk about the ETF flows, which have been a major driver of price action. Looking at the Bitcoin spot ETF data from CoinGlass, we saw a net inflow of 1,280 BTC on January 12th, with Fidelity's FBTC leading the way with over 1,230 BTC in inflows. However, BlackRock's iBit actually saw outflows of 777 BTC. This is interesting because it shows that the flows are not uniform across all ETFs. Over the past week, we've seen some volatility in the flows, with significant outflows on January 7th, 8th, and 9th, totaling over 12,000 BTC. But the tide seems to be turning, and the total cumulative inflows since the ETFs launched in January 2024 now stand at over 600,000 BTC. That's a massive amount of Bitcoin that has been absorbed by these institutional products. So, with all this information, how should you be positioning yourself in the market? Let's break it down for different trading styles, starting with the scalpers. If you're a scalper, you're looking for quick profits on small price movements. For Bitcoin, keep a close eye on the micro support at $91,000 and micro resistance at $92,200. You can trade the bounces between these levels, but be aware of the potential for a breakout. A break above $92,200 could see a quick move to $92,500, while a break below $91,000 could lead to a drop to $90,500. Use tight stop losses, no more than 0.5% of your position, and take profits quickly. The current low volatility environment is actually ideal for scalping, as the price tends to respect these micro levels more consistently. For Ethereum, the key micro levels are $3,100 for support and $3,150 for resistance. The same strategy applies. Trade the range, but be ready for a breakout. A move above $3,150 could target $3,180, while a break below $3,100 could see a test of $3,080. Remember, as a scalper, you're not trying to catch the big moves. You're trying to accumulate small, consistent profits throughout the day. Day traders have a bit more room to breathe. For Bitcoin, the key is the consolidation range between $90,000 and $94,000. A good strategy would be to look for long entries near the bottom of the range, around $90,000 to $91,000, with a target near the top at $94,000. Conversely, you could look for short entries near the top of the range, with a target near the bottom. However, given the bullish sentiment, the positive ETF flows, and the potential for a breakout, I would be more inclined to look for long opportunities. A break above $94,000 on the 4-hour chart would be a strong buy signal, and I would be looking to add to my position with a target of $96,000 to $98,000. For Ethereum, the range is between $3,050 and $3,300. Similar to Bitcoin, I would favor long entries near the support level of $3,050, with a target of $3,300. A break above $3,300 would be a very bullish signal, and I would be looking to add to my position with a target of $3,500. Use a stop loss below $3,000 to protect against a deeper correction. Swing traders are looking to catch the bigger moves. For Bitcoin, the key is the $85,000 to $86,000 support level and the $94,000 to $95,000 resistance level. As a swing trader, you could look to accumulate Bitcoin in the $85,000 to $88,000 range with a long-term target of $100,000 and beyond. The Bollinger Band squeeze suggests that a big move is coming, and given the fundamental backdrop, including the potential regulatory clarity and continued institutional adoption, I believe that move is more likely to be to the upside. For Ethereum, the major support is at $3,000 and the major resistance is at $3,600. I would be looking to add to my Ethereum position on any dips toward the $3,000 level. My target for the next swing trade would be the $3,600 level, and a break above that could see us heading towards $4,000. The risk-reward ratio here is very attractive with a potential upside of 20% or more from current levels. Position traders are in it for the long haul. For you, the day-to-day price fluctuations are just noise. The big picture for both Bitcoin and Ethereum remains incredibly bullish. The increasing institutional adoption, the upcoming regulatory clarity, and the continued development of the crypto ecosystem all point to higher prices in the long run. For Bitcoin, analysts are calling for a price range of $75,000 to $150,000 in 2026, with a center of gravity around $110,000. Carol Alexander, a professor at the University of Sussex, has noted that Bitcoin will remain in a high volatility range throughout the year. For Ethereum, some analysts are predicting a price surge of over 177% in early 2026, which would take the price above $8,000. As a position trader, your strategy is simple: accumulate on dips and hold for the long term. The current consolidation phase is a great opportunity to add to your positions before the next major leg up. Before I go, let me give you the key triggers to watch for the next 24 hours. For a bullish trigger, watch for Bitcoin to close above $94,000 on the 4-hour chart with increasing volume, and for Ethereum to break above $3,300 with conviction. For a bearish trigger, watch for Bitcoin to break below $90,000 and Ethereum to lose the $3,000 support level. These are the levels that will determine the short-term direction of the market. Thanks for tuning in to Boni's Life. If you found this video helpful, please give it a thumbs up, subscribe to the channel, and hit that notification bell so you don't miss our next episode. Drop a comment below and let me know your thoughts on the market. Are you bullish or bearish? What's your trading strategy? I love hearing from you guys. Until next time, trade safe, and I'll see you in the next one.